Everyone, welcome once again. So this is the Sterling Price Trader, and in this video I'll be doing a very quick commentary on this just concluded week, how price went to the levels, and how price, this week was NFP. This just concluded week was NFP, and how NFP delivered everything. And I'll also be doing the top-down analysis, sharing with you my insights that I'll be going into next week with, and what I anticipate to be delivered in price. And also I'll be trying to, towards the ending, to show my the exact time I use in setting my economic calendar, and how I use those news events to supercharge my trade idea. It's different from news trading, like how I use those news release to supercharge my ideas, what I'll be showing. And I'll also try to do my best based on my speed to be able to show you and do a walkthrough of the AM session trade I took, which is the AM session silver bullet, the AM session ICT silver bullet, which I did Friday after the NFP release. So wasting no time, I'll get started. Starting from the European dollar here, let me maximize it. So we have a tradition. With a tradition wheel, it's just like a general rule term of starting from the monthly time frame down, like from the higher time perspective. Monthly time frame is enough for me. I don't have to go like to the year. The monthly time frame is, unless if there's so much confusion on the monthly, then I have to accelerate probably to the year time frame, which is not, there's nothing wrong with that. So this is the cross-cut encroachment of this 1, 2, 3, 4 down close candles. This is the order block main threshold. So this is the name of the level here is the monthly bullish order block main threshold. That's plus OBOMT, which is bullish order block main threshold. And I told you how we'll be using that as a very important ingredient and determinant of price. And I also explained in my previous video of how this will not be an order block, why it will be this and not this, even though this is the down close candle, but why we'll be using this and not this. In my, I think the first video in the playlist of weekly commentary and top-down analysis on this channel is there. And also for my Friday's trade, the video is on this channel also. It's the video name is how to trade with no bias. So right to the weekly, I don't want to waste much time here. So not waste, it's not waste, I don't want to spend much time here. These are two lines, that's why it's looking so this way. But this is the main threshold I just showed you on the monthly. Also we'll have the weekly here. This down close candle, the opening price here is also essentially the same level as the monthly. Not the same, but essential, like they are relative, they are almost about the same level. So we saw how this week opened and traded into this inefficiency right here. So what was anticipated last week, before this week open, was just a slight little retracement for the European dollar. I didn't say or anticipate. Okay, I didn't favor this kind of price move, but I anticipate whatever price is willing to pen out. So last week I just wanted this inefficiency here. Let me try to make the view this way. Okay, this inefficiency, that the separation between this candle's low and this candle high, this is an inefficiency here. So I wrote here that daily premium. So it was premium as to last week, but now it's not more. It's a discount level now due to the NFP and how price traded. So I said this is the last line of defense for the bulls. I said sell side delivery, price shouldn't exit here, like price should not go beyond it, should not exit here for high probability sell side delivery. And so then that was Friday, which is this candle. Then Monday opened and immediately it overlapped. So it means once it gets overlapped, it means sell side delivery becomes low probability. If it wasn't exceeded, then high probability for sell side delivery. And I told you the levels will be visiting, which it couldn't visit. Thursday's low was taken, but this level, which is the sell side liquidity, what I was anticipating wasn't taken through. It wasn't swept out. And so this level, I'll be giving it a new name. It will still be a CB as it was, but no more premium. So, but discount. So this discount CB. So let me put the discount CB. And so I'll be removing this. I'll be making some editing. So I'll try to be as fast as possible. Okay, good. So this is how I'll be using this level now. It's a daily discount CB. That's sell side imbalance, buy side inefficiency. So that level, which is this level over here, this level in blue, so a rectangle, so that level is like a pseudo bullish, daily bullish order block main threshold. What do I mean? Now, the same way I showed you on the monthly time frame that I won't be using that singular order block. It should be here, you can rewind it. Why I said I won't be using this as the order block, but I'll be using this. So I'll be doing the same approach on the daily to show you why I call this pseudo. So this is, people, order block is the concept. I mean, people will be like, okay, the last down close candle before the up move, which is this. No, it's not always the last down close candle before the up move. Order block is a change in state of delivery. So we can see these 3 down close candle consecutively. The way I look at it is this 3 down close candle is a mother to this, because this is encapsulated in this. What do I mean in, for everyone so everyone can understand? These 3, you can see they covered, like it's contained in itself this, okay, these 3, 1, 2, 3 contain in itself this down close candle. So these 3 down close candle rather encompass, like it engulfs this singular down close candle. That is why it's superior to this just one down close candle. Price might react, you might see some reaction over here, but the real one is this. So that's the reason. So this is the real order block, and it's a change in state of delivery, because you see price went and this way, price traded up above it, and this is a fair value gap here, fair value gap. So I'll be trying to make this chart neater than this, as I'll be deleting some levels I just want to touch on. So price went above there, and I already even talking about what I anticipate for next week, but let me quickly run up and get some level of this chart based on what I wanted last week. So last week we were watching this main threshold of this order block. That body closure above here means a potential reversal and low probability sell side delivery continuation. LP is low probability. When I put HP, it's high probability, not HP, laptop, PC. So that's the level right here. And price actually on Wednesday closed above that level. So that alone, price closing above that level, its overlapping was, completely, lessening the probability for sell side delivery. So I'll be taking it out. So that's how, I put in structures, I put in, factors in place, to watch price. And also I had a last line of defense. It should be on the 4-hour. Yes, I had a last line of defense, which is this inefficiency right here. I said it's in the last week video, so you can check it out here. It's on this YouTube channel. That's the video that will be before this one in the playlist of weekly commentary and top-down analysis. So remaining on field, 4-hour CB, last line of defense. So I was watching that. I didn't want price to get there, and if it get there, it should reject. Then Wednesday, Monday, Tuesday was all below, going below. Then on Wednesday we went right there, rejected, good. But Wednesday, still on that Wednesday, we went and overlapped it. So that last line of defense had been breached already. So for that reason, I'll be taking it out. And that was how I, once I saw that, that's why I stopped trading on Tuesday. Once I saw that, it's like price is going to be doing something new, plus NFP will be on the Friday of the week. So that's the reason why that price was there. And this level is a 4-hour bearish order block. And we can see how price went into this level one. It's a little bit respecting this level, but it's still closing above it. This level was actually used 2 weeks ago, and also this level was used as the last line of defense for last week. So I'll be watching this new week. Will this last line of defense be giving way, or would it, this rejection now, would it be giving way? Because right now, for me, what I favor right now for next week is the European dollar is depicting a potential for a buy-side delivery. So it wants to shift in sentiment for buy-side delivery. So I don't want to I'm very surprised. My level here was not traded to, and on Twitter I called this level live, and was it this level, how price delivered, I think this level, then also this level here on Wednesday, this high, I outlined them on my post on Twitter. It's all there on X, and price was delivered there. So I used to call price live on my X account. So wasting no time, I'll be going right into this week's analysis. For the British pound, For last week, then let me focus on the European dollar. Then once I'm done, I'll be on the British pound. So the levels I'm watching right now, I'll go back to the weekly. I prefer the daily. So the level I'm watching right now for price this coming week is this level over here. I don't know if you'll be able to see this well, but let me make it this way. It should be bold. So this is an inefficiency. This candle's high, this candle's low. There's an inefficiency here. It's not completely closed up. So this inefficiency is what makes this order block an order block as a change in state of delivery. As candle closed above the opening price of this order block opening price, and then there's a fair value gap. So I anticipate next week for candle to open, probably Sunday, probably Monday. What day does it is not so much of a concern. What matters to me is how does price react as we trade to this level. So I'm watching this candle's high right here. That high is dubbed as this should be faded. It's dubbed as an immediate rebalance, which is here. Let me make it a little bit more clear. So that's a daily potential bullish immediate rebalance. That is, once price touch that level, it should make it right. It should immediately bounce off, like not like at that price level. It can go down because this is a daily time frame, so it might go down, but this level should act as a springboard, to shoot price higher. So that's why I'm watching that. This level is a weekly level, which I'll show that, and I won't go into the weekly on this time frame anymore, on this top-down analysis for the euro dollar anymore. So let me do it this way. Okay, I think it's okay like this. Look at this week. This week of 21st, before this week that we just concluded, the tail consequent encroachment. Well, okay, it's a monthly. So sorry. Yeah. So it's obvious on the monthly time frame. I was wondering where is the tail. So this monthly time frame, which is the month of October, you are in November now. So October had the tail, the midpoint. So how I do the midpoint of tails is I just take a Fibonacci, the low of the tail to the closing price for down close candle. For close candle, it will be the inverse, as the opening to the high. Then I extend it. That's how I get this midpoint right here. So that's consequent encroachment. That's the level. Previous months tail consequent encroachment. That's October's tail consequent encroachment. This level is a level I outlined which delivered live. It's a monthly quarterly shift objective which was fulfilled. So I don't think it should be visible on the lower time frame anymore. We don't need it. It has been done as we wanted it. So that's the level I'm looking at, and it's forming in sync like this. Remember, this tail is what I just showed you now. The monthly. This is a daily immediate rebalance, which is the mother. Come on. I think I'm getting something too fast. I'll repeat what I say. I will come over. This is the daily mother bullish order block main threshold, which is essentially the same level as the daily potential immediate rebalance that I showed you just now. I'll explain what I just said. Now, you see these three down close candle consecutively. The midpoint, the same way I use a Fibonacci. I take it. So I'm not using the weeks. Why? This week is small, but this tail had a pronounced tail. If this tail was as little as this week, I'll be using the weeks. That's the tail here and the weeks. But I use the body because that tail is a little bit pronounced. So that's how I use. If somebody's wondering when will you use the body, the swings highs, or when will you use the rejection block, that is the candle's body opening and closing price. So these are the criteria. So right to the body of this, you can see that level here, right here. So that's the midpoint. That's why it's dubbed that way. So it's the main threshold. Another block midpoint is main threshold, while inefficiency midpoint is consequent encroachment. So that's the reason why I called it main threshold, and that is how I got to the level using a Fibonacci. So to me, there's so much coloring here, and I'll be actually taking out this inefficiency away from the daily. I'll be using it later, but it is a daily inefficiency. It's a weekly inefficiency. So I think it should be on the hourly instead, out of the daily. So it's way better now. And also this wide inefficiency, This is a potential inversion fair value gap that we're looking at last week, but now I'm not looking at it as an inversion fair value gap anymore. It might want to close above it, so it's a signature and a plus that I'll be watching next week. Okay, the price wants to close up because right here we couldn't close above it on Thursday and Friday. We just were below it, but we have closed above the main point. So this level also is a little bit disturbing. So I'm trying to make the, because once it's a little bit too disturbing, I won't be able to, get my attention concentrated well. So this way I think, yes, I like it this way now. And I like to hide the labels. So yes, good. So this way I'm comfortable, I like it. So if you appreciate what I'm doing, you can give it a thumbs up. Feel free to comment your questions, your thoughts, or what you think I should improve on. So the midpoint, the main threshold, this potential immediate rebalance here. So I want price to come down next week, open. Probably Sunday might rally, Monday might rally, then Tuesday takes this Monday's high, Monday's low, takes Sunday's low. What I mean is this. Price might do this. I'll do that soon, but let me just talk about what I want to talk about. There are some arrays. So look at this level now. 1, the main threshold of this order block. 2, this order block that I say is a pseudo. It might have some reaction, that's why it's here. It's a pseudo order block. It's not a real, this is the real order block I told you by this trade and close candle. So this one is a pseudo order block. So this is the main threshold of the real order block, the opening price of the pseudo order block, and the pseudo order block I will only be making it visible on that daily time frame. You can see it because I don't want it to have so much influence in price as the lower time frame. It'll just be there on the daily time frame so I can look at it intraday if I want to trade or do something. And this is the consequence encroachment of the month, the monthly. I said it already, monthly tail consequence encroachment. That's October's month tail consequence encroachment. So there are so many. So price can open here and it can even come here and touch here. Then it should reject, and which I should see buy side delivery because now I'm favoring buy side delivery. So favorably, I think buy side should be done, and all these highs and this inefficiency can be drawn to and visited. So now, what would I watch, or what would happen in price for me to say, okay, I'll be sitting on the sidelines? I did it last week, and you can see that I told you I stopped trading on Tuesday. So except when I saw something on Friday and then I executed on top. So what will make me sit still and say, okay, let me wait for more information? This inefficiency right here. This one. So it's the last line of defense. When you see me write something like LLOD, it means last line of defense. LLOD means last line of defense. So I'm going to try to show it again. So LLOD, that's last line of defense for the bulls. That means for buy side to be able to be sustained or continuing. So that's for the bulls. This is the last line of defense. If they fail and this line breaks, then the bears are in control. That means we'll be having sell side delivery. They might take this low and we might still go, but this is the level I'm watching. If price overlaps it, then I'll be sitting still and waiting for more information. But price should not get but I'm permitting for the sake of overzealous price delivery for weak. It can weak to this level, but it should immediately reject, and that will be even low probability because all these arrays, immediate rebalance is one of the strongest PD arrays. Like there are two I know, immediate rebalance and institutional order flow to do. Immediate rebalance is a strong one. Like it should not fail. If immediate rebalance, like now, if you open and a daily candle touches here, I don't want another daily candle to come and touch here again. This purple line. Once you open and price touches it right here, I don't want another candle to be here. I don't want another candle to touch it again. It should just be a once touch. I thought it should be like a trampoline. It should bounce. It should spring price higher. So it's just a one touch I want to see there. And there's an inefficiency. I'll be saying inefficiency, which is the change state of delivery. This is the inefficiency. This candle's high. This candle's low. There's an inefficiency there between them. So let me make it this way. I just don't. This midline. It's not supposed to be so. So you can see it, the inefficiency between them. This the low of this candle did not touch the high of this candle. So that's why that's a change in state of delivery, and that's why that fair value gap is being important to me right now. So I won't want too much of a discount to be visited here, because Friday already retraced down on this was Friday, all here came down and came to this level. So I'm expecting just a touch here and probably come to the tail consequent encroachment, and then we'll rally and start attacking buy side. So these are all last line of defense right here. And look at that, last line of defense for the BS. That means false continuous sell side delivery. Price should not go above here. And price popped here and reject immediately. Beautiful. Anything that makes price to overcome this level then will be going high and high and high. So why am I watching for my drawn liquidity? I've told you where I want price to retrace to for a potential entry. This immediate rebalance, which is essentially the main threshold of the weekly order block, of the daily order block rather. The main threshold of the daily order block, the one I just called the model order block. That's just the way I can interpret it. It's not that probably that's the name, but model, like it's the main, not a pseudo. No, the main order block to me with my current understanding. And we can see this inefficiency here. It was overlapped. This inefficiency also was, on that. It's on the analysis I had last week, if I'm not making a mistake, and it was overlapped, so it should have stopped price from going further, but Wednesday completely overlapped that inefficiency. So we're using that inefficiency to watch, okay, how deep will price come. So the inefficiency is there, and also this is a 4-hour order block, so I just make it here because I don't want it so much relevant. But the reason why I leave it here is because if a 4-hour candle opens, if a 4-hour candle opens here and then closes here or above it, man, that'd be a supercharger. Like it will supercharge a potential for a high probability buy side delivery. I told you HP is high probability buy side delivery, not liquidity. Delivery. So I'll explain what I mean right now. If a 4-hour candle open here and goes low, probably long, and still closes at this order block level, this price at 1.08346 or even higher, if any order block does that signature, then, if any candle does that signature, it becomes what? It becomes a high probability for a potential buy side delivery. So that's why I left that level and I set it only to be visible on the 4-hour time frame. So that's that for the 4-hour time frame. And I'm still watching this order block opening price, because price is still respecting it. Once price disrespects it, like that main threshold I showed on the daily at the beginning of this top down analysis is here, then we might be anticipating a further buy side delivery. So a further buy side delivery. Feel free to check the main threshold of the daily order block. You can rewind the video how I deleted it. So that's how we're treating this level. Should price overlap it, and I'll deleting it also. And that's it. So a quick recap: the immediate rebalance on the daily, the main threshold of the model block opening, the main threshold of the model block potential bullish order block, and the consequent encroachment of the month of October. This is just concluded month October. We're in November now, 2024. October's monthly tail consequent encroachment, the midpoint of the tail. So those levels, they are what I'm watching for price to react off from. So this is the 1 hour. I actually like the way the view of this used to be. It's better. So this is the 1 hour time frame. And there's a little bit of cluttering I'm seeing. So I think this main threshold, I actually want it to be out here so I can it's better now. So this is the immediate rebalance. It's very, very obvious now. This inefficiency, I made it out from the daily time frame. It's a weekly, like a balanced price range or a main threshold. So I'll touch on that and come back here in a second. In a few seconds I'll do that. So this order block, this 1, 2, 3, this is an up close candle. That's how I'm not counting it. This one is an up close candle, but this 1, 2, 3 is a down close candle. I did it in my videos. You can check that. I showed that I zoomed it in. I won't be zooming in here. This is an up close candle. This 1, 2, 3 are down close candle. So the midpoint is about the consequent encroachment of this inefficiency. So that's why I say it's a weekly balanced price range, and which is essentially the monthly the main threshold of the weekly bullish order block, and it's a deep discount as at when I was outlining the level. Now it's not such a deep discount, but it's still discount. And we can see how candle came in here, and the characteristic of a immediate rebalance is that you don't want to see the consequent encroachment to be overlapped by candles, like the midpoint of such a balanced price range. You don't want to see the midpoint to be having a closure. And we can see on the monthly time frame, none of this, the previous weeks, before this previous week, the 2 weeks, they couldn't even close below the main threshold. Now on daily time frame, I'll be at the 60-minute time frame, by the way. On daily time frame, that same thing, signature, was dubbed. You can see the main threshold is this dotted line. That's the midpoint of that balanced price range, which is essentially the main threshold of a weekly order block. No candle closed below it. You can see that signature in price. So that's why I'm watching, like, is this gonna be sustainable? Now on the 4-hour time frame, something a little different was going there. We had closures here, and that was why I watched last week, and I was expecting this low to be taken out, because of this closure. There was some slight closure here, but nope, this low was the one that was targeted, this low, and couldn't get here, and Wednesday just ramped up. So that's why I watched that level. So that balance price range, based on the higher time frame, it's been respected, and it's showing probably price might want to go higher. I'm not still very 100% confident that price will go higher because of some things on the dollar index that we're touching in this video, and I'm also on the British pound. So you can see also this 1 hour closed below the main threshold of that inefficiency and the sell side. So it's a little bit, questionable, but I don't demand price to come here again. Like, in as much price, I thought this is the last line of defense right now. This is the last line. So I like to make it red, so to be like, okay, why is it red? Like a danger. So it's like the last line of defense. So I don't want price to exceed this level. Once it's exceeding this level, then when we come from this low and this low, and price might just, I don't really can see if we'll be going bullish again. But in as much price stays above here and just key off this immediate rebalance, consequent encroachment of monthly tail, that's October's tail consequent encroachment, then which is also essentially the main threshold of the mother bullish order block on the daily time frame. That's enough for me. That's really good. And we'll have inefficiency. This inefficiency is a monthly inefficiency. I'll be showing that. But this is a BC, a buy side imbalance, sell side inefficiency. So I would not want it to become a bearish inversion fair value gap. What do I mean? I don't want price to come and overlap it. Like, let me extend right. So I don't want price to come and just overlap it and just keep going down. No. Even if price should happen to overlap it, then if price happen to overlap it, it should balance it by going up above it. I don't want this to become a bearish inversion fair value gap. So that's what I mean. I'm watching that as a caveat for price. So this immediate rebalance, I'm watching it very closely. Potential immediate rebalance, consequent encroachment, and that's the level I'm watching. This inefficiency is like a draw on liquidity. Look at it on the weekly time frame. That's the inefficiency here. This separation between, so it's a draw liquidity, and this previous week's high at 1.09058 is the buy side liquidity right there. I don't know if it's annotated. So that's it here. 1.0958. So it's previous week's high, which is a buy side liquidity. So that's a drawn liquidity. Also on the daily time frame, we can see an inefficiency here. It's a premium in it. This is premium now. So this inefficiency is premium. Show it to me. Daily premium, sell side imbalance, buy side inefficiency. Draw on liquidity if buy side delivery will be offered. So I'm watching that level also. And if price want to be over zero, this is a relatively equal high. So that level is daily relative equal highs, which is a buy side liquidity, and also is the low of a daily CB, which is a sell side imbalance, like this inefficiency here. So it's the low. So those levels, what I'm watching, if price wants to go up, it can be over zero. But this previous week's high is something very reasonable, and this inefficiency is a contentment level for anyone just looking to if price gets there, you might be okay with. Well, depending on how your appetite for trading is and how your model is, but that level is very reasonable. It's a reasonable target. So that's that for the European dollar. I want to segue. Okay, my Friday's trade. I'll be talking on that at the end of this video. So let's see how quick I can deliver on this video. Then I can come here and talk about Friday's trade, which was this New York opening gap was used. I don't want to talk much on that. British pound. Now, same thing on the monthly time frame. This will be way more faster than the European dollar. So this is the monthly time frame. Previous month low still looks suspicious for me on this British pound. Maybe price might want to go low. I'm not sure. It looks a little bit suspicious. So going to the weekly time frame. As I told you, I'm not just bent towards what's this array just causing turbulences here. So on all my analysis, going through the last 2 weeks, I've been talking about this level since price has been here. I've been measuring this inefficiency here, which is a balanced price range. Look at it here. So I'm watching this inefficiency, and I said something. If for whatever reason, this is a weekly BPR. BPR is balanced price range, last line of defense, LLOD for the bulls. If traded to the downside, that is, if price goes there and then overlaps it on a daily time frame, on a daily basis, or on a 4-hour time frame, but preferably a daily time frame, then I anticipate the British pound to tank lower. Like it should just fall. Like we want to see a deeper price, like lower prices. It might be coming for all these lows and all those kind of things. So that's what I'm watching for price. In as much price is not able to do that, then they still hope for a potential buy side delivery continuation. So that's the level I'm watching. So I'll be going to the lower time frames. So this level also is an inefficiency, which is like a balanced price range. It's a BC. So I will call this a BC, not a really ideal balanced price range. But you can see how price, even though the British pound went down, it still had so much energy that it could recover. It recovered, like look at that, and it still closed above the main consequent encroachment of this inefficiency. It took out this sell side though, as anticipated. So I'll be deleting that. This is the commentary I'm doing right here, and I'm doing the analysis at the same time. What I'm anticipating, this sell side was actually outlined in my analysis before this week's just concluded on Sunday. Is it Sunday or Saturday? I can't remember the day I posted it. But before the week opened, I said I want this to be a sell side draw on liquidity, and it did that even when the European dollar failed to actually deliver its own sell side liquidity, which was here. The British pound did it. So that's it, and that it happens at times. So I'll be deleting that level. So remember, I said this inefficiency, whatever makes it overlap, then I think price will be going lower. All these lines are order block main threshold. This is the weekly bullish order block opening price, which is also like a daily bearish order block open. You can see this order block right here. This 1, 2, 3, 4. The opening price is here. The main threshold is here. That's the midpoint. So the opening price has been traded through. So do I have a delete on this? No. Okay. And this is the main threshold. This is the main threshold of the order block, which is also a deep discount. The consequent encroachment of this BC, the consequent encroachment is essentially that level. So how price react there is very important. So the level I'm watching next for this coming week, what is this level here? Okay, I'll talk about it on the daily time frame, but just a side note before we go to the time frame. This is a weekly potential bearish immediate rebalance. I was anticipating to act on daily time frame, but it didn't do that, which was the reason why I didn't trade all those Wednesday, Thursday, and all those things, because of all the signatures in price. I was like, I think price might want to shift direction to the end of 2024, going to 2025. So I'll be using this insight to be able to explain why the kind of signature I'll be anticipating for this. So you that don't understand what the immediate rebalance is, that was explaining on the European dollar, or what I was talking about here, what I wanted to see, I'll be doing this purple line here, which is on the daily time frame. I'll be doing justice on that on the British pound. So let's go back to the British pound. So that's based on last week's expectations. But I want you to note some level. This just concluded week, the midpoint of the tail, which is tail consequent encroachment at 1.28818, this level. Previous week's tail consequent encroachment. I'm permitting wicking through here, but nobody closure below here. So the candle can trade low and touch it and just wick through it, but I don't want to be seeing a higher time frame body to be closing below here. And also, canvas is set here. This level is previous week's consequent encroachment. So the wicks are the upper part of the candles. The wick is the upper part, then the tail is the lower part of the candle's wick. They are both wicks, but the lower one is called the tail, the upper one is called the wick. So the consequent equation, this I'm looking for it. I'm looking at it as a potential draw on liquidity, and I'm watching it if price should close above it. So let me just write it: a potential draw on liquidity. So if higher time frame bodies, that's candles of higher time frame, closes below here, higher time frame body closure above here is a plus for buy side delivery. So if a higher time frame, which is a daily or 4 hour, closes above this consequent encroachment, then that's a plus for a potential buy side delivery. So these are the level. This is an inefficiency. This inefficiency, they used to disrupt my eyes. I don't used to like the coloring in the chart. Let me see, is there any no, there's no. Let me just make it away from here. Good. Let's it remain there. So I'm watching the British pound. Now, we might be coming to this low, British pound. British pound might go way lower than the European dollar because the British pound was able to recover so much. It was not so, like, look at Friday, was an up close candle for the British pound. What do you see in the European dollar? A down close candle. You can see that. So the British pound recovered so much of the downside, and it might want to go deeper to the downside, or even inversely might go beyond the European dollar. But what I'm looking at, I don't want so much discount on the European dollar, but I'm permitting discount for the British pound, which is this sell side can be visited. All putting in mind that this inefficiency, whatever causes price to overlap this inefficiency, man, I'm gonna be bearish until further notice, until it gets overlapped to the upside again. So that's a signature I'm watching in price now. So this immediate rebalance, I said I'll be discussing on it. It's a weekly, it's a tail. Look at it. The low part of this week. So I wanted next week to just open, touch it, not go this way, just a little bit and come down. But what happened? We opened here this Friday, Tuesday, Wednesday, right? So on Sunday we're here. So Monday opened and just went, like, it just disregarded it and even went ahead and took out Friday's high. Right there I knew it failed. It could be reused, but I don't like, it's a strong PD area, and once it's strong, like a strong guy, let's say stronger in a team, once the strong guy is failing and is getting beaten, other guys wanna, they wanna, come on, something is wrong here. This strong guy is getting beaten up, and all of us might be, what hope do we have? So it's a strong PD area, and it gets like it was hammer wrestled. It submitted. It's submitted. It couldn't keep price from going up. And there, I left it here just to touch on it as a commentary. That's when I knew, okay, Monday, I might not want to trade so much this week, and Tuesday I stopped trading. It just wasn't good. This just concluded weeks. It's not just worth it, so I'll be deleting it. So next week, the kind of reaction you want to see on that bullish order block, this one's a bearish, sorry, on that bullish immediate rebalance, you see they are the same color. So the colors of my levels are very important. So that bullish immediate rebalance on the European dollar, the potential bullish immediate rebalance, which is here, this candle's high. The kind of reaction you want to see there is this. What happened here on Friday? You want price to just touch it, go a little bit above it, and immediately reject. So for this on the European dollar, what I want to see is price should touch it. It might go a little bit beyond it to this consequent encroachment of this monthly tail, that's October's tail consequent encroachment, and then reject to the upside. So this kind of signature that the British pound depicted, that was dubbed in the British pound on Friday, and that's what I want to see for that. So this level, it's taken out of my chart. And also, I outlined this level here, this consequent encroachment, this Tuesday consequent encroachment on my previous week's analysis. I outlined it as what? As the last line of defense. So I said previous week's Tuesday's daily week consequent encroachment. I'll come again. Previous week, that is before this just completed week open. Previous week, that's now current now is 2 weeks ago. The Tuesday, that was a Tuesday daily week consequent encroachment. I told you the upper part is the week, the lower part is the tail. So the midpoint of the daily week is the last line of defense. I put this delete there, so when I'm doing this video, I'll just delete it. So I was watching that as my last line of defense. I said it on that video. You can watch it, feel free to go and watch it. So Fridays. And I said it's the last line of defense because Friday actually went very close. Friday's high was 1.29987, and that level is what? Just about 1.3001. I didn't want price to go to that level. Price went there, right there, on Monday. Price went above it. It went above it by 14. Yes, it went above it on Monday. So that's right there. I knew, oh, no. This is very, this week might be a little bit challenging for people that traded. If you experience some challenges, no problem, you're not alone. But one important thing is knowing when to step away from price. You have to know that. So since I put delete there, I'll be deleting it. This also is a daily order block opening price, and look at it. Price was respecting it throughout before this week just opened. Friday, Monday, then what happened? Tuesday went above it. Wednesday went above it. So I don't like that. It's like it disrespected it, and then it came down below it. There's so much of manipulation here. So I'll be deleting this. I don't like the way it reacted. It can be used some other time, but no, I wouldn't like that. The one I'm focusing on is the main threshold of this order. That's the midpoint of this order block. So this order block don't have so much of a pronounced tail, so you can easily use the tail and draw it out. What I mean is this: you can easily put the Fibonacci on the tail down to the high. That way you can see it about that level. So that would be the consequence encroachment, because the tail is not so pronounced. Like, look at this wick, look at these tails long. Once the tail are little small like this, you can use the tail, but once they are pronounced like these tails here, look, and these wicks, you use the bodies. So that's the main threshold. This level is daily bearish order block main threshold. I anticipate an overlap in longer time. So if we'll be going bullish, if we'll be having a buy side delivery which will be sustainable at least let's say 3 weeks, then this level should be overlapped. This week should want to overlap this level. If it gets overlapped, then this buy side here will be taken out. This buy side liquidity here at 1.30436, and also buy side liquidity here at 1.30709. So that's what I'm watching as drawn liquidity for the British pound on the daily time frame. So I told you 2 levels at the weekly time frame before I came in here. I told 2 levels. I said you should take note of 2 levels, which is the monthly tail consequence encroachment. This level at 1.28714. So this is daily tail rather. This is daily tail. That one was monthly tail is on the European dollar. Weekly tail is on this British pound. I didn't allow it to show here on the daily, but it's showing on the 4-hour time frame, because on the daily I want to be using the Thursday's tail, not the weekly tail. So Thursday's tail consequence encroachment, the closure of higher time frame body. When I say higher time frame, I mean the 4-hour or the daily time frame. So closure of higher time frame body below here lessen the probability for a potential buy side delivery coming week. So this coming week, if prices in a daily time frame begin to close below this level at 1.28714, then going high might go, but it just lessens the probability. And that has been said conversely, that if price is unable to close below here on higher time frame basis on the 4-hour or daily time frame, then price should have a higher probability, not it must, but a higher probability, a potential for a buy side delivery that will be tradable, and it will be good delivering to the upside, which is a buy side delivery. So I'm watching that level, and should we get that signature, which means price can open and trade to this level, and look left, this level is actually the main threshold of the order block, or this can be, I discussed it right in this video before I came down here. So that level is in sync with this level. So like stacking of multiple PD array it's a reinforcement. It's just like multiple layers. Like imagine you are trying to make a concrete or a slab or a culvert for a car to pass, or a bridge. You are stacking up bricks. You can just compare a one plane brick, like let me just say like a window. Now you have a glass window, a window that's just very tiny compared to one that is thick. A bulletproof window will not be so tiny, like some windscreens are actually very thick, but you can compare a bulletproof door, a glass bulletproof door, the thickness, with just a window used for building common houses, like the regular window in houses, the glass. You can compare that kind of window with the bulletproof glass door that will be in places like a bank, or public places, or security, politician, all those kind of things. So stacking of multiple PD arrays like that reinforce strong bulletproof glass door. So here we'll have 2 strong arrays here together, and if you look closely, let me just let that level show. This level, let me make it visible on the daily time frame. So if you're enjoying this video, I'm really getting tired, you can just subscribe, you can like the video, you can comment, it's good. So this level, you can see this is the tail of the week, the consequent equations of last week, weekly tail. That's the upper one. And this is upper one is for the week. That's previous week's tail consequent encroachment that I permit a weekend through but no body closures. Then this lower one is what? It's for daily. So I'll be taking it out as I think it's neater this way for me. So you can see multiple arrays are just there, and this also is Friday's low at one point. Look, when I say open high, low, close, whatever, once I mention this level, the way you focus is, look, as I put my cursor right here, look top left, OHLC, open high, low, close. So once I put the, here, you can see closing price here. You can see low, high. So the low of Friday was 1.28848. So that low, which is here, this 1.28848. That low is Friday's low. So Friday's low, sell side liquidity. So price might want to go there and sweep Friday's low as sell side liquidity, and then we might want to be seeing a potential for a buy side delivery. So I think my battery is going. Let me quickly get my charger, so I'll be able to. That's telling me that I'm spending so much time here already. And I try to do this as fast as possible. So you can be watching price right now. What I'm seeing, you can see that red line. This red line right here. Let me plug in this charger. That red line is Wednesday low, and it's not just anyhow low. I discussed in a video I did a video of knowing what specific time to trade the silver bullet in your country, knowing the exact time in your country. So this is actually the sessions low I think I touched about it, sessions lows and high for draw liquidity. Yes, I talked about it for target of the silver bullet, which is a model, a time-based algorithmic trading model that I use. This is my model. So this low here is actually a sell side that I anticipated before this week commenced. So I was watching that sell side, which is 1.29072 right here. So the name is Wednesday PM session sell side draw liquidity. BODB means best of the best. So best of the best is like the best of the best I want to see price to go to. Like this is if you are trading and you want to target for sell, because last week we were bearish, so price you just come here. This is the best of the best, but obviously price exceeded that. I didn't even expect price to come into this inefficiency, and it did that. So this was a very business manipulation. Look at 9 a.m. on the European dollar. You can see that it's small compared to this large range candle here on the British pound. So the level for the British pound was delivered, but for the European dollar it was denied. It didn't deliver it. So I'll take that away as it has been fulfilled already. So I've told you buy side, I'm watching it. So these levels now we'll have those two levels. The first one, which is this blue here, is the Friday's low, which is this kind of low. I told you it's 1.28848. The Friday's low. The next one is previous week's tail consequent encroachment. This is it that I permit for weekend through. And the following one is Thursday's tail consequent encroachment. Higher time frame close. I talked about that already. And this is what the weekly bullish order block main threshold, which is also essentially the weekly deep discount BC consequent encroachment at 1.28750. So then that's that for that, and I'm bullish here. And the draw liquidity I'm looking at, I told you already, this buy side here, maybe I should make the price stay in there at 1 point. So to me this is like the best of the best. Like it's not like price can exceed it, but like if price gets there, like you should be content with that, best of the best draw on liquidity. So that's the best of the best draw on liquidity, and looking at that level, if price will continue to the upside. And this is a 4-hour inefficiency that was actually used. I wanted to be a bullish inversion favor lookup, but price fell off it on Tuesday and we couldn't go up. So all these levels, they're looking so messy. I plan to remove all these levels. Yes, I remember. Yes, let me quickly touch on that as I go away from this. This was before this week. This was how the candle was. It was Friday. Monday, Tuesday, Friday. Okay. This was how price was when I did that analysis. okay, this way. This is Friday. So I told you the consequent encroachment here. I was watching it. Okay, I said I don't want price to come here, but due to the, lethargy in British pound, which is here, based on the British pound lethargy, it could easily retrace up here. And I say I'll be deleting it as I'll be touching on it. Now we can see this week, Monday right there, bam, Monday just went in there. That was when I knew something's wrong. Tuesday closed above there. So that's how I use those levels. I'll be deleting it. I only left it for this video purpose. And also this level was previous week consequent encroachment, potential draw on liquidity, 5 time frame, 8 plus. Okay. That's the level I say you should note when I was talking about here. I told you to note two levels, which is the tail consequent encroachment and the week consequent encroachment. This is the week consequent encroachment for last week. This just concluded week. This is the tail consequent encroachment. So this tail now I'm watching, I don't want body closure to close below it. But this week I want body closure to close below it as a plus, like a plus signature for me, like okay, this will reinforce my trade. So this level is the week's consequent encroachment, which is a potential draw on liquidity. So you can use that as a target. Then you watch again, the price want to close below, above it on a higher time frame, that's on a 4-hour or a daily basis. If price close above it, then it's a plus for a buy side delivery that might be sustainable. Then you'll be seeing this buy side to be tagged at 1.30436 and 1.30709. So I think I'm really very exhausted now. So I think this is enough for price. So this inefficiency is very important to me. Anything that makes price to overlap it, then everything I'm saying here will just be reversed, and I'll be focused on sell shorting. Is it sell shorting? Selling down, selling whatever, taking short entries. But in as much this inefficiency is not overlap, then but something can happen which I don't want to happen. This low can actually get taken out, so it's possible. So incorporate that in your anticipation. It can get taken out, but remember I want body to be remaining above here. So I think I was in the 1 4-hour time frame. This is an inefficiency. I took it out, but I'm watching it. If price has not yet overlapped it, it's almost but not yet. So if price overlaps it, but before price overlaps it, I will favor price to actually come down here, then overlaps it, and it's a plus. It can be used to shoot price higher. That's the 1 4-hour basis. This green line here is order block. A daily main threshold, order block, anticipate an overlapping long term. Did I speak about that? Daily time frame. Yes, I spoke about that when I deleted the opening price. So that's the order block, the main threshold. I touched on that. And this is an inefficiency. I think it's also the time frame inefficiency, premium CB, which is just confirmations to watch price. Then finally on this 1 hour time frame, so that's the buy side liquidity I'm watching. So you might be anticipating something like this. Price can open. Sunday might just be playing around, but it can go down Monday. Even Sunday can actually go down, then even touch this level. It might not even come as deep as it might just go down a little here on Sunday and just keep going up. Or it might even come as far as taking this low, which I don't want to see. But from here, if price touches here, I want to see it immediately reject. Then it can reject, it can come into some levels, offer a potential. Then this new week opening gap is like a very strong confidence I use. And I'll be touching on that, how I use it to trade Fridays, trade AM silver bullet. So if price overlaps this new week opening gap, that's a plus. Like it's increasing your probability of your trade being successful. So in as much price, not a determiner, like it's just something I use like a signal, like this is good, this is good, this is good, this is good. So if price overlaps it, like now if you see a very dark and cloudy, a day you come out and you just look at the day, it's very dark and cloudy, well, it's a high probability for rain to fall. But if you see the day very sunny and sometimes rain just change of a sudden, but if you see a very sunny day, nobody just say, oh, rain is going to fall right now. No, but if you see very dark and cloudy day, you might want to drive faster to where you're going to, and the rain, if you're on bike, you might really want to be quick because you anticipate that there's a high probability that there will be rain. So if this get overlaps, then you'll be focusing more on buying because it's a high probability that we'll be seeing more buying and all those kind of things. So price can go there and just keep going higher, might come down to touch it to give an entry for a long, then shoot up even further high, targeting our buy side and all those levels I've been anticipating. So that's, I'm not saying price will do exactly this way, but Something like this is what I'm anticipating. Price should go down into a discount, forming the low of the week. And I don't try to catch the low of the week, by the way. And it should do all those level and all those. This level is a confirmation. So if bodies are closing above here, I spoke about it, so it will be a plus. So the same way you use the new opening gap, you use all those weeks as confirmation for high probability scenarios. So I'm done on the British pound, longer than expected. Dollar index. This is the first time I'm talking about dollar index in my analysis because of the reason, which I'll be saying it. September. Feel free to comment your thoughts, your questions, and give me a thumbs up. Subscribe if you haven't, if you're watching this for the first time. If you find this impactful and knowledgeable, you can share it with your colleagues, your fellow traders, and let everybody benefit from what I'm trying to divulge, So this level is the consequent encroachment, is the midpoint of this monthly tail, this July 2023. It was last year's July tail consequent encroachment. So I drew that line, and I was watching September. If September, and I wrote here, let me see if I have not cancelled it. Monthly tail consequent encroachment. I'm reading here. A great order flow determinant coupled with the monthly discount BC. So it's inside the BC. Should month September close below here, then I will be bearish on the dollar index till the end of the year. Okay? So if I'm saying, what I'm saying essentially is, I'm watching this level. Well, the month of October, the candle, will it close below this level of 100.717? Would it? Nope. With it, then look at it. When I put the on this candle, then you look left top, OHLC. So the open local. So the closing price of September's candle was, this is the monthly time frame, by the way. So the closing price was 100.757, and this was what, 100.717. The closing price here was 100.757, while this level was 100.717. So September, let me zoom it so you can see it. September closed above that level, and that is why I will not be bearish till the end of 2024 on the dollar index. But why I came here is this inefficiency now. The same way I said this for September, which reacted and you saw throughout October. I didn't post about that. I haven't started doing the analysis then, but I drew this level. As I was doing the analysis all week, I drew it and I was monitoring it. And what do I write there? Order flow determinants. Monthly CB, that's sell side imbalance, buy side inefficiency. If overlapped to the upside, then buy side might be sustained. You know what that means? If this guy is going to be giving buy side, then for risk off and risk on scenario, the futures, the indices, and the forex pairs, like all pairs that are crossed against the dollar, should be selling, should be going down. So that's why I'm very, very nimble with my expectation for next week. I'm still watching this very closely because it's possible. I think it's happened when you see both the European dollar and the dollar index should be rallying, but the best situation should be dollar should be falling, European dollar should be rising, or the European dollar should be falling and the dollar index should be rising. So that's why I came here to touch on it. Nothing more than that. It's bringing my suspicion, so I'm watching that level and priced nicely for the 1, 2, 3, 4 weeks of October. We just kept going higher. So that's the table making the sound, by the way. So, and we can see that level, and price came in here. So I wouldn't watch so much of retracement into here, because if price will be retracing in here, it will come deep. So this up close, this down close candle, I'm watching as an order block. If it's sustainable and able to keep price from falling below its main threshold in closures, the tail can come low, hit the rejection block over here. But if the main threshold, the midpoint of this candle, keeps price in closure, then we might continue upside. But if it fails, then it will really come deep into this inefficiency, because there's lots of just going up. Look at that throughout October. As price failed to close, you can see on the lower time frame it did close below, but on the higher time frame it didn't. So you can see here October 1st. Look at that. So that's how I didn't post about that, but this was what I was watching in my mind and looking at that, and that's it. It was delivered. So this one I also said if it goes above it. So In as much this did not fail, it does not get overlapped, then I think this guy will keep going higher than dollar index. But I won't be pressing that, okay, since dollar index is going high, the Forex pairs and indices must go low. No, it's what I see. I will say what price is delivering and the way the signature of price is doing. So I'm done here for the dollar index. I won't be saying much. It's also new week opening gap. So for the NASDAQ, I'll be done soon. So NASDAQ, I was anticipating a buy side. I was looking if we could come here at 21,237.75. But I told you a caveat. I said if you see body closures above this inefficiency, and then Monday opened, Tuesday indeed closed above the inefficiency, but Wednesday opened, came low. It was still okay if Thursday continued, but Thursday fell like really bad. And look at this order block, the opening price right here. This is a major order block to me. This one is just, but this order block had some good reaction, but I look at this as a major one because it encompasses this one. So I think that's an annotation error. But they will have reaction. That's why I left that on the daytime frame on, is it the European dollar? So they will have some reaction, but it's good to know the real ones. So price, the main threshold is about the midpoint, and I can see this candle is closing below that, which means there's a probability that price might want to come here. It's very possible. I'm not saying it would, but it's possible that we might see price join to 19,818 big figure. This is like a phantom trend line. This line, like it's what they call phantom trend line. Diagonal support, that's the retail diagonal support. So that's what the retail call it. They'll be like, okay, if it's touching it, you buy. So it's just a signature, like it's something that the smart money cannibalizes. So if price might want to come here, because all these lows were just, it's too, look at that, too much of, there will be sell stops right there. So price might want to go there, and that's what I'm looking at. That's just, I don't see anything buying right now. It might still go, but I'm not really sure. And also for the Emini S&P, the sell side here at 5,724 big figure. Let me confirm that this low is 5,724 big figure. This title, so is the low. So I'm looking at that. This buy side has been left untouched. So it's a possibility for this low is what this candle's low is. Remember, once I put the on this, you look left here, OHCL. So if I put it here, the low here is what? 5,733.25. The low of this candle is 5,732.50. 0.33.25. 32 point. So this is lower. It took out this low. That's it. I can zoom it so you can see it. It's lower. So this is lower. It took out that low, and that could be enough. But I'm still watching it. It's a possibility for this low to still get revisited. So that's what I'm watching for the Emini S&P. And that will be all for my top-down analysis, what I'm expecting for next week. So you can just give me a thumbs up. Like, I'm so stressed out, I'm exhausted. But as I said, there are two more things I'll be doing, which is talking about my trade of Friday, and I'll be very fast here, and my economic calendar, the way I use them. So Friday, I told the reason, which is I did a video on that. I really extensively, I taught in that video, which is trading with no bias. I taught extensively. Might be trading and you'll be like, I'm trading the European dollar, but look at the British pound, it's going 10 times faster than the European dollar. Why? I said why, and I said how you can figure that out even before trading. Like, you can figure, I did it right there. I came here with no bias. So I was initially planning to trade the British pound, but what I saw immediately, I went to the European dollar, and the European dollar outperformed the British pound. It really did outperform the British pound. And it's really, let's see the British, if it gives us the same time. So about 10, you can see the British pound here from 10. Show it to me. From 10 o'clock right here, which is the AM session silver bullet. 10 o'clock. Price was just like, look at that. Let me just show it to you with a rectangle. So this is 10 o'clock. Look at price. It's like down to 11. 11 is the stop time window. Down to 11. Like, price is more like in a range. Look at this confined range. Look at that. It wasn't so, it's not, look, it's not, you don't see something like this. You don't see something like this. price was more ranging. It was going up, but it was ranging. Compare now. We're going to compare this with the European dollar on the same time, which is 10 to 11 on the European dollar. So look at the European dollar. So I'm trying to make it as visible. I think this mode should be good enough. Now look at the European dollar now. Let me draw a rectangle there and you see there's a difference. This is 10 o'clock. 10 o'clock. So 10 o'clock was here. Look at it. So now let me draw a rectangle. You can see now the rectangle of it was just like this. But to 11, let's draw it to 11 like I said. 11. Now look how wide. The rectangle looked like it went down. Like it has a more larger breadth. A more lengthier breadth than the British pound breadth of the triangle, which is the breadth area. Look at that of the British pound. Where's the rectangle? Where did you go to? Look at that. What I'm just trying to bring out is the European dollar outperformed the British pound. In that video, it was evident. It was evident by far. The European dollar was really going down, while the British pound was just destroying and destroying. It was just retracing and retracing, retracing and retracing. This one was just, it was easy. Anyone who traded this will be, you have a good stop loss. Look at it from 10 here. Look how it fell lower, like just completely down to 11. And 10 o'clock, notice 10 o'clock, right? 10 o'clock, 10:02. This is 10:02 high. This 10:02 high never got taken out till now. 10:02 high. Now let's go to the European dollar and look at 10:02 high. I taught this extensively in that video, so I'm not doing too much. 10:02 high on the European dollar. I'll delete this. And I'll delete this. 10:02 high on the European dollar. This is 10:02 high. It was immediately taken out at what? At 10:12. Now let's look 10:12. That's 12 minutes past 10 on the European dollar. Look at that. It was lower than 10:02 high. So price, it really went well, and the trade is on my YouTube channel, which is Trading with No Bias. That's the name of the Trading with No Bias and No Indicators. How I trade with no bias, or how to trade with no bias and no indicators. So as I said, that's how I traded for the Friday. That's after NFP. I didn't trade NFP. NFP was a manipulation. NFP was it? Look at that. This was NFP release at 8:30 Friday. It's pushed price higher, and I told you why I'll be going short, because throughout Friday price just was going high and high and high and high. Like, look at that. So it's reasonable to see retracement, and that was why I sold. And obviously it went down. Even this tail consequent encroachment, I was anticipating it to get there. I was stopped out in profit. The tail consequent encroachment was not traded too. The tail consequent encroachment couldn't get traded too, so it couldn't. At that time within 11, but later it went there, which proved that okay, I actually was right about it, but I just couldn't. I was also really tired, and I didn't want to wait so long, so I was able to be stopped out in $500 profit, and that was okay. And you can see price even went lower on the PM session, and even came to this low, which was the best of the best. I was anticipating the sell side liquidity. I used that on the 15 minutes time frame. I won't be showing it on here. So look at that, price really went lower on Friday, and that's the business. Look at that. So I was like, why didn't you get the model? This is the model. I was done with this. I don't want to sit and it depends on your model. So that's that for that for Friday's trade. And for the economic calendar, so for the economic calendar, I'll be going right to Google, and let's see. I use baby pips, so as I put it shows baby pips. Why is it loading? Okay, is the network poor? It should have been loaded by now. This is not what I'm looking for. Baby pips. Yeah. So this is the baby pips economic calendar, and I'll be changing the view because using this view is not the best. So but this is where I'll set the time. I'll just set the time with this view. So once you get to this and you click it, you search for New York. So I'm just giving you this to clarify all that. Search for New York. You can see London, also New York GMT4, also UTC4. once you use New York, then you choose your week. We're using this coming week. You can see here last week, this week, next week. So we're going to be looking for next week since the week hasn't started. But if you are doing it once the week has started, you'll be using this week or you'll be using the day of the week. So you set the time here, and this is so you can see the next week. This coming week is November 3rd to November 9th, 2024. So this is how it will look like. I'll be using this view. You permit me to use this view. So this is the economic calendar. Remember, the time is set to GMT4, which is what New York time. So that's very important. So this is all the news, and this is the news we use. So I don't trade on Mondays unless it's an NFP Monday, but these are the news. All this. So this election coming up on Tuesday. So it will not be nice for anybody to just go there and be trading ahead or just drawing. It might it might influence. It really should impact price. This ISM PMI services PMI, which was the same news that was released on Friday, which I traded at setup. So let me just put yesterday, which was Friday, because at the time I'm making this video, it's so Friday was November 1st, and you can see there was NFP at 8:30. Let me make this. There was NFP at 8:30, non-farm payroll, but at 10 o'clock there was what ISM manufacturing PMI. Now let's go back to next week, which is this new coming. The week still the time still remains New York time. So it's very important, very very important. The New York time still remains New York time. So this is the coming week. This is Sunday, Monday, and I just told you now on Tuesday there's something election. If I'm not presidential election. So it will not be very beautiful. It's not be something advisable to trade on. So this is how you set your calendar. You can see this Wednesday down to Friday. You can see everything. So I just will basically download it so that I won't be having issues. So I always confirm, okay, before downloading, because if you download the wrong time, you just mess your whole trading up. So New York, so I just download. So I download it and it's downloaded already. So once it's downloaded, that's how I'll be using it for the trading. I won't have to be coming here and loading it up and loading it up and loading it up. So I think due to the record, it's downloaded already. So that's how I use it. So hopefully you find this video impactful. I really delivered my best in this video, and hopefully I speak up with you next time. You can subscribe, share the video with colleagues who might want to glean some insight, and I wish you all a good trading week. I wish you all the best. Have a great time ahead, and keep the comment respectful, everyone. You can comment your questions. I actually can, go ahead and make your video to answer your question. So trading view is refusing to give me the horizontal view I want to see. So okay, so that's it. So I explained the trade and everything. So thank you all once again. I'm so grateful. I'm so grateful for sticking to the end. If you did, I appreciate you. Feel free, ask your question. I always say ask you because I love to, I want to clear the doubt. If I have the capacity to, if I don't, I'll try to refer you if we can get it from other sources. And also for anyone who stick to the end, on my Twitter, actually, my X account, the same name, the Sterling Price Trader, the handle is on this YouTube bio. You can check there. I call price live, and I tell you levels I want to see during the London sessions, for the AM sessions, and it's usually delivered beautifully. So thank you all for watching.